Welcome to this explainer. Today, we're taking something that usually feels totally mysterious, the dry, sometimes boring mechanics of the FICO score, and translating it into a literal blueprint for reaching the financial penthouse. I'm talking about an 800-plus credit score. We're going to break down exactly how you can construct a rock-solid financial reputation from the ground up using practical and fully legal strategies. Think of yourself as the master architect of your own financial future.
All right, let's dive into the blueprint for today's build. First, we'll lay the 800 score foundation, then construct the two heaviest pillars, move on to optimizing your credit structure, and finally, wrap up with avoiding fake fixes.
Section 1. The 800 score foundation, setting the stakes.
So we got to start by laying the foundation, right? We need to understand exactly what we're building and why hitting that penthouse level of credit matters so incredibly much. When we talk about an 800 score, we aren't just talking about having good credit. A score above 800 is officially considered exceptional. It literally puts you in an elite tier where lenders practically roll out the red carpet for you, offering their absolute best loan terms and the lowest possible interest rates.
Which leads us directly to the why. Hitting this 800 mark isn't just some abstract bragging right for your next dinner party. It translates structurally into thousands of dollars saved over your lifetime. Whether you're getting a new credit card, buying a car, closing on a house, or even just trying to rent an apartment, your credit score is pulling the strings. Having an exceptional score means paying less in interest every single month on your mortgages and auto loans. That is real, tangible money staying right in your pocket just because you took the time to build a solid foundation. Section 2. The two heaviest pillars. Carrying the weight.
Okay, the foundation is poured, the stakes are set. Now we've got to erect the two heaviest pillars that carry the vast majority of your entire credit structure. If these are weak, the whole house comes tumbling down. The first, and frankly, the absolutely most vital pillar, is your payment history. It's the single biggest factor affecting your score. You've got to always pay your credit cards, your loans, and your bills on time. Why? Because just one single missed payment can cause structural damage that hangs around on your report for years. Lenders want reliability, and a flawless payment history is the ultimate proof of that. Think of it as the core steel beam of your profile. Then we have the second pillar, credit utilization. This is basically the percentage of your available credit that you're currently using. Now, general financial advice usually says to keep this below 30%. But hey, we're aiming for the penthouse, right? To hit that 800-plus exceptional tier, you really need to keep your utilization strictly below 10%. Let's put that into perspective. If you've got a credit card with a $10,000 limit, keeping your utilization structurally sound means keeping your actual balance safely below $1,000 whenever possible. It proves to lenders that your financial discipline totally outweighs your access to capital. It shows them that, yeah, you have access to a lot of credit, but you aren't desperate to max it out.
Section 3. Optimizing your credit structure, the roof, and fine-tuning.
All right, the main pillars are securely up. Now we're adding the roof and reinforcing the structure with a few crucial elements. First up, a quick word of warning. You really want to avoid applying for too many new credit accounts all at once. Every single time you apply, it triggers what's called a hard inquiry on your report. A couple of these, totally normal, but a bunch of them in a short window, that can temporarily weaken and drag down your score. It kind of makes you look a bit too eager for credit, and honestly, that just makes lenders nervous. Building this kind of structure takes real time. Over the months, you want to keep your older credit accounts open to improve the average age of your history. Seriously, closing an old card is basically like knocking out a sturdy support beam. Then, as we move into years, try to cultivate a healthy mix of credit, like balancing credit cards, auto loans, maybe a student loan, or a mortgage. This just shows you can juggle different types of credit responsibly. Just a quick side note though, never borrow money just to build credit, but a natural mix definitely helps. And finally, looking over decades, it's those consistent on-time payments that act as the mortar holding the whole shebang together. Now, just like any good building inspector, you have to regularly review your credit reports. You're auditing your files for three very specific, very common errors: incorrect late payments, accounts that just completely don't belong to you, or inaccurate balances. If you spot any of these, you've got to dispute them with the credit bureaus ASAP before they quietly rot away your foundation. It's totally on you to make sure the blueprint matches the reality.
Now, what if you're laying your very first bricks and have absolutely zero credit history? Well, you've got a super straightforward two-step plan to get moving. Step 1. Look into using a secured credit card. Step 2. See if you can become an authorized user on a well-managed account of a highly trusted family member. Either of these options can beautifully help you lay down that initial positive footprint.
Section 4.
Avoiding fake fixes. Protecting the house.
Finally, we have to protect the house we just built. Look, building an 800-plus credit score simply doesn't happen overnight. You've got to be aware of those scammy companies promising instant fixes or magic overnight repairs. Listen to me on this. There are absolutely no legal shortcuts. None. Zero. The absolute safest, most effective way to build exceptional credit requires patience, careful management, and the responsible borrowing we've talked about today. It's all about consistent effort over months and years.
So, you now have the complete architectural blueprint. By applying these strategies today and just sticking with them, your credit score can and will improve steadily. A rock-solid score is going to open the doors to lower interest rates, way better financial opportunities, and honestly, just greater peace of mind. Which leaves us with one final, pretty exciting question to ponder. Your financial blueprint is ready. When you finally reach that 800-plus penthouse, what are you going to build with it?